What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at SOFI Technologies stock, ticker symbol SOFI, on a variety of time frames in anticipation of the next trading day, Thursday, February 22nd. Well, guys, SOFI stock here today finished the day down about 40 cents a share, 4.7%. It is making an upside move of approximately, it's like about 1.2% here in the after hours. Of course, we just did get a relatively favorable earnings out of NVIDIA. We'll see how we open up tomorrow on all of these names, but a lot of the tech sectors are moving here tonight. But let's take a look here at this name and start looking at this as we head into tomorrow. Let's start here, though, with the 1-minute chart. You guys know I'm a scalp trader at heart. That's what I do every single day. So while this video is geared toward looking at SOFI stock as we head into tomorrow's trading day from more of a day-to-day perspective, laying out all the levels, getting really contextual, looking at the options bias. First, I need to start out with looking at the 1 minute to see, okay, are there any opportunities that formed today that I or you guys could potentially look at replicating tomorrow? Okay, stock setups, scalp setups that have edge. By the way, if you guys want to get my scalp setup alerts, just take a look at the first link in the pinned comment. I'll just leave it at that. Let's take a look here, because this is one of my backbone setups. I call this setup the repeat offender. Now, the problem here on SOFI is that the range was so tight that we're talking about a much different style of trade, okay? And for a repeat offender setup, typically for a tighter ratio, I'm typically looking at 15 to 20 cent stops and about 30-cent winners, okay, targets. The problem being on SOFI is that the volatility, it being an $8 stock, the volatility is not quite there. And for me, while I wouldn't necessarily shy away from trading it, there's two issues. My first issue is that even a cent wide as far as the spread is concerned, if you have to take much larger share size, 1 penny of slippage is a much bigger deal than 1 penny of slippage if you're looking at a 20-cent R, for example, risk per trade, right? Because for the same dollar amount, to get the same R value, you'd be taking less size because it's a bigger range. So that's my first problem with, for example, a repeat offender setup. My second problem is the majority of my playbook, and honestly, with the majority of intraday traders' playbooks, you know, we'll be the first to admit that they will be the first to admit as well. You take the best traders on the planet and you tell them, okay, listen, you can no longer choose which tickers you trade. Okay, you tell them you just have to trade Apple every day. You have to trade every day and you only can trade Apple. I will be the first to admit, and I think most other, at least profitable traders, would be not ashamed to admit, they'll just lose money every single day. Okay, I would just lose money every single day. 99% of the stock market every day is just too random. It is chop. It's chop. If you're trading big blue chips or you're just trying to trade one stock intraday every day and you're like, I don't know why I can't make this work, you're trading chop. There's no edge in chop. There is tremendous edge in stocks that are in play. Unfortunately for SOFI, well, actually, this is pretty indifferent for SOFI as a stock. It's just, unfortunately for me, I suppose, SOFI wasn't technically in play today. What's in play? Big fresh news catalyst, elevated relative volume, things like that. So to be more specific here to SOFI, while a repeat offender, the volatility maybe isn't enough to make sense for taking the kind of size that I would prefer to take on a trade like that, SOFI could make a lot of sense, at least when the volume is a little higher in like that first third of the day. It could make a lot of sense for a setup like a breathe and go if it's in play. So I'm going to be keeping an eye on SOFI. Maybe we get some news. Maybe we see some elevated R-vol. Here in the near term, I'll just keep an eye on that. Now, let's move on from the intraday mentality and start looking at tomorrow. Okay, so here on the 5-minute chart, what am I looking for? I'm looking for volume. Right, you can see here that, you know, contextually speaking, we got big volume off the open. That to me is within reason. We got big volume on this red candle. However, it was kind of we got a big bottoming tail on that candle. It's not like it was a big dump off candle. It was actually relatively unchanged. I mean, the candle changed by what, 2 cents from open to close. So I'm going to kind of call that big volume candle on the red candle a scratch. And we did get some significant volume here into the close. Again, well within reason. The 5-minute chart here, not a lot of interesting data we can pull out, so let's move on here to the 30-minute chart. Okay, this is where we start getting really contextual for tomorrow's areas to watch. See this? The 200 period and the 50 period moving averages, see how they've come together? To me, that's highly intriguing, right? In my experience, when you have two self-fulfilling prophecy, highly watched moving averages like this, the 200 period and the 50 period coming together, it doesn't quite double the strength. I would say it adds maybe about 50% to the strength of that region. So bulls, ideally, going to want to see a strong push through to reclaim both of those levels as support, ideally here on the 30-minute. Bears, you would really want to see both of those kind of stay together and start fading downside, helping to push the stock lower from a psychological perspective. The 4-hour chart here, you can see this is just as in play as anything else. These two are coming together. We're forming a tighter and tighter channel. We are now treating the 50 period on the 4-hour as support. I'm going to want to see that hold as a bull, okay? And ideally, you want to get a pop back above that 200 period that we lost today. Now, if you're a bear, you want that 200 period to act as resistance, and you want to see a fade down beneath that 50 period. And even if we see a retest, you want to see a hard fade back down below. Now, let's move on to the most important chart of all, and that's going to be the daily. The daily on SOFI, I know for a fact, is incredibly relevant right now. Look here. This channel between the 200-day moving average and the 50-day moving average is less than 50 cents wide. And we're currently heading down for a test of the 200-day bulls. I want to see that hold really, really well, because you see what it's lining up with. It's lining up with $8 a share. And 8, I want to see hold. Bears, really, your primary goal right now is to snap up below 8, right? You want to see $8 a share break. Okay, bulls, you want to see that hold as hard as possible, head back up toward the 50-day moving average, 850, because really, what's the ultimate goal, at least in the short term as a bull? Reclaim 850. Okay, now you're probably gonna see a lot of traders trading around that 200-day moving average tomorrow if we do see a test. Also, if we end up seeing a test of that 850 region with the 50-day, you're probably gonna see a lot of traders making trades around that region. So don't be surprised if volume's a little higher, and you can kind of get in their heads a little bit. Where are they going to set their stops? Okay, and you can maybe look to capitalize on that movement. Now, let's take a look at the options bias from today. So we have a pretty good sample size actually on SOFI today. 120,000 total contracts traded. We have 78,600 calls, 41,800 puts. That is a bullish lean here today on SOFI. Okay, the short-term speculators, the short-term options buyers and sellers, right? The 0 to 20 delta, 23,000 calls, 15,000 puts. So we're seeing a short-term call bias as well here today. But listen, remember, as always around here, risk management is going to be number one. Stay in the game. No one trade is worth getting blown up, of course. Stay in the game is the number one priority. And the options traders, they can, of course, be wrong. So manage your risk. Appreciate you guys. If you got value out of this video, subscribe to the channel, and I'll see you in the next one.